Howdy, Jacob here. Next company on our dividend yield screener is B2Gold Corporation, ticker symbol BTG. It is a metals and mining company, specifically gold mining, and has a little bit of stake and interest in some other miners. They have a $3.9 billion market cap with enterprise value of $3.6 billion. So more cash on hand than debt, which is great. Definite positive sign there. The thing about commodity, like gold mining companies, commodities, is that they follow, similar to how oil companies follow, earnings follow the price of oil. The earnings on a gold mining company will likely follow pretty closely in line with the price of gold. But the thing about gold mining companies is that they produce cash flow. So it's way more simple, in my perspective, to actually calculate what these type of companies are worth. But um, we have a 5.26% yield. Like we said, higher cash than debt, which is great. A lot of their assets on their balance sheet are in solid amount in cash, a little bit of inventory, and then a lot in property, plant, and equipment. Pretty low debt. Not gonna lie, that's pretty great to see. A long-term debt of 13 million, which is very small. Um, let's see, cash flow over the years since 2018. Let's see, 300, 230, 620, 450, 550, and they're paying out about 180 million in dividends. Um, okay, see share based going up pretty consistently because they're not buying back any shares and have 20, 25, 23 million towards stock based compensation. I think we can start making some assumptions here. So I think personally, revenue is going to grow pretty consistently with inflation if it follows something like commodity of gold. So might do a classic 313, so 3% revenue growth, 13 on terminal price earnings and price to free cash flow, just because I don't see any premium required. Um, After 7 years, it's still going to be mining for gold. Um, And although the last 2018 to 2021 looks like high returns on invested capital, with them paying out this dividend, it looks like they're not really reinvesting too much back in. They're definitely spending a lot on their property, plant, and equipment to maintain a lot of the equipment they use to extract the gold, I'm sure, but um, there's really not any reason for premium I'm seeing there. But margins, let's see what we're averaging: 18, 23. Like that, the free cash flow is higher. Um, this operating margin increased pretty heavily 2018. I presume that's just the commodity price. Okay. Um, so all right, let's assume maybe 15%, 20%, pretty all over the place, but um, really shoot in the dark here without digging into company specific detail. Share issuing pretty consistently increase about 2%. Um, so that gets us to last thing I didn't do. So dividend. Do I think they can raise it? So it's a pretty new dividend. Um, it looks like they can easily afford this. Let's see, 160 million. But over here, 500, 450, 600. It looks like they can easily afford it, but with the commodity price being kind of volatile, or the earnings being so volatile based on the commodity price, I'll probably stick with saying that it's pretty even. Um, just because they have pretty consistent earnings and free cash flow, I think this is a fairly safe dividend. Again, with positive earnings, free cash flow, along with a healthy balance sheet, makes dividend payouts a lot more consistent and a lot more reliable. So I think this is honestly a pretty safe dividend. I'd be skeptical to say it's going to go much higher just because, again, the earnings are pretty volatile. But I do think if you're looking for income, this could definitely be something with a 5.26% yield right now. Um, Again, not so confident necessarily on the price appreciation, given that to get a 15% return on everything looks like it need to drop 35% with these assumptions. But I hope everyone else reviews this. Could definitely be a company you want on your dividend screener, given that the dividend payout is reasonable and their balance sheet looks pretty great. So hope everyone has a good rest of their day, and thanks so much.